everyone, welcome. You are tuned into the special edition of Build Your Portfolio right here on BTV. The budget event is now behind us. It was a bit of a non-event in terms of some of the announcements that came in. Most of them were in fact on expected lines. Of course, there was also the announcement on LTCG. There was an immediate reaction that you saw, and then markets took it in their stride. So choppy session overall, but ending absolutely flat as far as the benchmarks go. The mid-caps came under a bit of pressure, but then again did recover in line with the movement that we saw on the benchmarks. All in all, a volatile day of trade, but considering the event risk, it was a steady close as far as the street action goes. Of course, all depends on once most of this news is digested, how stocks react tomorrow going into the weekend as well. There were a couple of other global cues as well that kind of got ignored as far as today's trading action goes because of the budget event. So our purpose here on this final edition of Build Your Portfolio is to put the spotlight on the budget, the big announcements that came after it, and how you should realign your portfolio in light of everything that's happened. Three special guests as always, Arun Kejriwal, Ashish Chaturmota and Mayuresh Joshi in our studios after a long time. Mayuresh, what was your sense of all the budget announcements? Most of them on expected lines. Anything out of the ordinary here?
A large element of bunch, I think, were on expected lines. Again, I think the LTCG imposition, the fear that the market was going into, I think got justified once the FM announced that. But the strange element was that the STT part has not got removed. So again, I think the ambiguity surrounding both STT staying and LTCG coming through, though the grandfathering clause ensures that the returns are protected till 31st Jan. So I think the large element in terms of how FIs will also view this development, because even they get taxed, and if you assume the currency depreciation in dollar terms to happen by 3 to 5% as we've seen in the last few years, they're obviously going to take that much additional hit on their portfolio in dollar terms. So a large element is going to be over the next few weeks in disappearing how the entire economic scenario points out, with the corporate recovery that we're talking about is really here to stay. The earnings have been resilient so far, so if the earnings recovery points out a very strong projected figures in the coming quarters, you might have some respite. But yes, I think not seeing a sharp correction in the markets, but nevertheless, I think there might be some amount of time and a little bit of price correction in the coming few weeks.
Mayuresh, let's in fact talk about the rural theme here. Lots was spoken before the budget. There were some immediate reactions that we saw today, especially on tractor stocks. Escorts, BST tillers saw a rally. There was some talk about affordable housing. You were using NABARD and giving priority sector states to affordable housing lending. There was also talk on rural infra being a theme, and obviously then aimed at rural consumption. In light of all of those announcements, is there any change that you would make in your preference towards some of these rural-oriented stocks?
No, so we were working with 3 A's, right? So A was agriculture, as the finance minister has rightly pointed out. And again, the increase in terms of allocation is to the tune of 10-12%. So it's a little bit above normal, if you would put it that way. The other leg of the investment theme that the Exchequer has put through is through the affordable housing segment, and that's a pet theme that the Prime Minister holds very, very dear. So again, I think strict implementation is liquid at risk about rural demand, right? 33% of that comes in from the rural demand. So the cement offtake as an indirect play is something that can actually be played out, because if serious implementation happens, specifically on the rural side, 33% of cement offtake will happen on these tier 4 and rural side areas. The other allocation in terms of what has actually happened towards capital outlay and infrastructure outlay, again, I think that was more or less on expected lines. But the more important critical argument here would be the implementation part of all these schemes, and whether the right use goes to the right person at the right end. So if that probably happens, you're probably going to see further offtake happen in terms of discretionary spending happening from the tier 4 towns. So to that bit, yes, I think if the different sub-segments of agriculture are concerned, tractors, seeds, fertilizer offtake, they might do well. You're also getting the feeling that the financing firms on the rural side, whether they are microfinancing firms or rural financing firms, will have a larger offtake in terms of the credit outlay that I give to these sections of society. So as a theme, yes, I think selectively stocks from a bottom up should do well. From the affordable housing, as I said, the offshoot also happens not directly for the developers, but also for NBFCs, which are housing finance companies. But you also got cement as a play.
You have to share some names.
So to a large bit, yes, I think I do like BST tillers. I always like that stock. You're probably looking at Action Construction Equipment. fantastic set of numbers. And what you probably got in terms of the capital outlay that they've done, so the capex has already been done. You're probably looking at leverage being played on the balance sheet as utilization level picks up, specifically on their crane segment. They've also got component of construction equipment and agri equipment. So as all these engines start firing and with the utilization levels going up, the leverage on the bottom line can be pretty substantial. The announcements that he's done in terms of sanitation and more toilets being created, the obvious plays are obviously there, Cera and the types. But Visakha Industries can be an interesting component here as well, because the plyboard business that they've got is a very critical part of it. It's a 1.3 MTPA capacity. They're extending it to 1.8. There's a huge market size of almost 800 to 1,000 odd crores. And it's again the leverage story that can get played out on Visakha. Allocations on road, I think my favorite play is Sadbhav, with expectations of debt coming down. Order book is extremely strong, and with expectations of Ashoka Buildcon in their management saying that 4,000 crores can actually get added over the next 2 quarters through the HAM route. I think the IRRs there are far more significant. So as a play, I think these stocks selectively should do well with the kind of outlook that they can get.
So Mayuresh, ITC buy or hold?
It's a clear hold. So again, as Arun was mentioning, I think no bad news is good news, and nothing expected on the tax front, at least for ITC. The other element of ITC is also their other FMCG business, and that has broken on a positive note on the EBIT front. The kind of capital employed over the past few quarters and years, I think that is definitely starting yielding results. A significant portion on the EBIT still comes from the cigarette business, the volume degrowth that we've seen. But the inelasticity component probably ensures that the price realizations remain very, very stable. The apple and paperboard business expected to do well. We've seen the numbers in terms of tourist arrivals and so on and so forth. So yes, as a stock, I think the earnings growth should start coming through. The second element in terms of being at a valuation discount to its peers also works in its favor. But the premise here again is that over the next few weeks, till you get some amount of clarity in terms of numbers actually stacking up on a quarter-on-quarter basis on a positive note, the price might just get constrained in range. But the longer-term outlook probably looks very, very constructive for ITC.
I can ask you this question in terms of the fund manager's dilemma over here, because a lot of investors in the market are going through some kind of pain in the last 1 month as far as the route that you've seen in some of the mid-cap stocks. If you are looking to build your portfolio going forward from here, what should your stock selection strategy be? What would be your stock selection strategy that you would advise others? Would it be primarily large caps, as markets have been talking about it? Would it be very, very selective in mid caps? Even if you're looking at mid caps, maybe wait for a correction? How should one align their portfolio or realign their portfolio if need be right now?
So going forward, I think my entire premise is going to be a 40% allocation towards large caps. The basic premise here is that the moat that large caps have created, and if one really expects earnings momentum to catch up significantly, I think they have all the ingredients in terms of riding onto this wave to ride the earnings momentum and create leverage on their balance sheet. But again, I think the mid-cap portion is not something that you can ignore, because that is the one that is probably going to give you the alpha in terms of the consolidated returns. So here I think a little bit more selective in terms of both sector as well as stock selection. Sector-wise, again, I think the allocations are not just what the budget has given, but in terms of the earnings outlook as well. Because the markets is now going to reward companies with an earnings perspective. I think the PE expansion has already happened for a lot of sectors, for a lot of stocks, but where the earnings momentum will sustain and improve and compound going forward, I think the PE multiples might just compound if you look at the earnings outlook improving for these companies. So sector-wise, as I said, again, I think selective on infrastructure, you're probably looking at a few power themes that I like, apart from power that Arun mentioned. I've been a strong believer in a few of the power transformer companies, power transmission companies. Again, infrastructure selectively in terms of road assets, EPC players, a few of these power BOT guys. I think they should do really well in terms of order intake and generating IRRs. And I've been selectively bullish on a few mid-cap IT, but those stocks have run up quite significantly.
But do you still see value in buying them, even if need be right now?
No, again, I think correction is something that I look forward to. So I think if a time and price correction as one perceives happens, I think that would be an opportune time to probably look at these stocks staggeredly. So I think you don't have to go gung-ho and all out at one go. There will be time, and there will be decent amount of time periodicities where you can get entry points. So I think patience is the key here, and as Arun was mentioning, I think it's going to be a stock pickers market.
It's going to be a stock pickers market. So Mayuresh has given us his strategy and some names that he likes. Thanks so much for watching. Thanks so much, Mayuresh, Arun, as well as Ashish for joining in on our studios. News and updates will come to you on the other side. Keep it with BTV.